Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video, I'm going to give you an overview of one of the ETFs that we spoke about a very long time ago. We haven't done an update on this ETF for a long time. ETFs are a very good way, easy way of investing into the stock market, because instead of just buying loads of different single stocks, which could potentially be a dangerous thing to do, if you don't know how to analyze, if you don't have the time. For example, companies like 3M, you might look at the details and say, oh, this is a really good company, not knowing that this company is going through a lot of legal situations and you could potentially lose money. Right now, I'm down 27.5%. Okay, so that could potentially happen. I'm not losing this money, obviously. It's a really unrealized loss right now. But it could happen, okay? The company might keep going down and then I might have to sell it or lose all that money. Whereas an ETF, if you own basically an ETF, what could happen is if 3M is 2% of this ETF, what's going to happen is you're going to lose that 2% and the rest of your investment is absolutely fine. Okay, and that is one thing I really like about that. Just sleep well at night. You don't have to worry about it. You dollar cost average every single month, the same amount if you need to, and then you forget about it. You don't need to update. For example, Broadcom comes up with a new earnings report. You don't have to look at it. All that stuff is basically done for you by somebody else. You just pay them a little bit of money. Well, sometimes it can cost you a little bit, okay? In the long run, it will cost you a lot of money, obviously. But you are doing it because you know you don't have to worry about the price fluctuations. They update it regularly every quarter, every year. They add new companies. They get rid of all the companies. They make sure the performance of that ETF is good, blah, blah. They're doing all that job for you. So in a way, it's an easy way to invest in. And if you are new to the channel and you start a new investment journey, start looking at I've got a section called a playlist, just all the ETF and with all the ETFs. Some of them I've updated recently, some of them I haven't, and that's why I'm doing it now. So I'm going to update all of them in the next few weeks, inshallah. So what I wanted you to do is, if you're really basically new to basically investing in the stock market, look at these ETFs. It's not a financial advice. I'm not saying you're not going to lose your money. You could still lose money, but it's an easy way of investing, knowing that you don't really necessarily need to know the ins and outs of every single company in your portfolio. And then you can start dollar cost averaging every single month, and then you don't have to worry about anything else, okay? So it's a nicer way of doing it. So what I'm going to do right now is I'm going to go over the ETFs, give you a lot more information about it. But before I do that, if you haven't joined us on the Discord, please do it so already. Patreon account is basically, it will cost you about £2 a month or £4.50 a month, and you get access to all the ETFs. There was a little bit of glitch this morning, so I've actually updated all of them. Thank you to one of the brothers that have recently joined us on the Discord. He mentioned it this morning and I've updated it, so hopefully there will be no more glitches. But let me know if you're having any problems with that, and it really helps the channel, okay? So that will be wonderful if you could do that. So the ETF that we're looking at today is Invesco Dow Jones and Islamic Global Developed Markets. We've talked about this a long time ago. Invesco is one of the biggest ETF companies out there. So they basically do a lot of ETF, including the NASDAQ, for example, QQQ. Basically, it's part of that family, if you like. So basically, they have loads of different ETFs that track different markets and they hold a lot of assets. So they're not really a new company. They're not like a very risky company. I'm not basically affiliated with them or anything like that, but obviously anything can happen. But based on what I've seen, they are not as big as Vanguard and so on, but they are quite big in the US, okay? And they have loads of different ETFs. You can look into it now. The ETF that we're looking at today is this one. So you can actually find the ticker. Is based in the United Kingdom, basically in Ireland, but the ticker is that you need for this one is the IGDA if you are looking for in the trading 212, for example. Okay, in terms of asset under management, it's about 242 million. Basically, they don't pay any dividends, so they reinvest in that dividend and so on. And I'm going to give you a little bit more information in a second as we go along. Okay. So that's the first part. Then you've got key documents here, and if you're interested in this ETF, just look at some of these, and I'm going to show you some of them right now and give you a little bit more information about it. But it's really interesting to read this. So we'll start with the Sharia. So now you've got a bit of the key information about these ETFs. There's a lot more, by the way. You can read about all of this. There's a lot more information in that, just the first page if you like, okay? If you click security information, okay, you'll find exactly what I was talking about. You can find the references, so certain details. You can find, for example, the fact that the dividend treatment, they are continuously reinvested. So they take that money. So a lot of the companies that pay the dividends, what do? They take that money and put it back into, okay. The minimum investment is basically 1 share, which is really good. And obviously you can buy it in London Stock Exchange, and obviously in Switzerland as well. If you live in any of those countries, you should be able to find, and there's a lot more information in there. The other things that you could do is you can buy it in ISA, so which is nice. So if you've got an ISA account with Trading 212 or any other company, then you can buy it. Or if you've got a SIP as well, you can do the same thing. Okay, so there's a lot more information, like I said, that you can actually dig into. And then I'm gonna basically, oh, by the way, this is what I've actually this surprised me a little bit. Number of holdings, 1,700 different companies. Okay, and that is what we're going to do next. They look at Sharia compliant side of things first, and then I'm going to show you the holdings in this ETF. So one of the documents that basically they have here talks about Sharia compliant committee. Okay, now I've got a video coming up to kind of summarize all the indices that track basically these ETFs used to track. Okay, some of those ETF basically indices come from an S&P Global. It comes from all sorts of places. So I'm gonna give you, I think, about 5 or so. I'm in the middle of basically finishing that video. Inshallah, I'll release it the next week or 2. Okay, but you will have a lot more information, and hopefully that will give you the bigger picture. So when someone comes up with an ETF, they have to then use one of those indices to track that. Okay, and this one tracks the Dow Jones one that we will talk about at some point. So they've talked about here basically the fact that it follows the Sharia compliant basically criteria, and that was set by these scholars. These scholars are hired by not this ETF provider. They don't do anything with that. They talked about the fact that it doesn't follow the basically things like they don't sell alcohol, pork, and all of that stuff that basically we always talk about. But what they said here, the industry providers maintains a Sharia supervisory board. So what this means is the S&P Global and the Dow Jones, is the people that have come up with that indices, this ETF tracks, are the ones that maintain that the supervisory board. So they have nothing to do with it. And that's something that I'm going to talk about, inshallah, in the next, to kind of give you the bigger picture of why these companies don't deal with the Sharia compliance side of things. They track the indices and then that's it. Okay. One other thing I want to mention as well while we're talking about this is when you look at it in an ETF, they don't treat ETFs as you look at the basically breakdown of the holdings, which is basically what we're going to talk about now. Okay, let's go back here. Let's go to holdings first, and then I will show you what I'm talking about here. Okay, so this is the top 10 as of 8th of June, right? And as you can see, you've got Apple, Microsoft, Amazon, Nvidia, Alphabet, A-class and C-class. You've got Tesla, you've got Metaphor, you've got Exxon, and you've got J&J. All of these companies, none of them are outright non-Sharia compliant. Okay, Apple, for example, there's a question mark. Some of their revenue comes from, obviously, recently they started basically that interest rate. Basically, you can earn an interest on any cash that's sitting in Apple, whatever. Okay, you've got Microsoft that could potentially fall into that sort of a category of like advertisement side of things. Amazon, entertainment side of things. Nvidia should be fine. Alphabet, a lot of their money comes from advertisement, which is basically questionable because it might include things that are non-Sharia compliant. But they don't look at it that way. Okay, they look at this ETF as a one stock and then apply the standards. Like, for example, is 5% of entire ETF. Okay, does it come from halal basically investment? Less than 5%. If it is less than 5%, khalas, then they move on. Then they look at the entire interest bearing debt, then they look at this, and then they apply the 33% or the 30%, depending on which one you're looking at. Okay, so that's really important because a lot of you will say to me straight away, oh, by the way, why are you talking about Apple? Is actually not. They're not looking at that. They're looking at the entire ETF and treat it as a one single stock and apply the standards to them. So that's very important. So let's now have a look at a bit more detail on these companies they own. That's in the ETF. So you can see here 7% is actually just Apple, 6%, and then the rest about 2%, and then 1% each. Now, as it goes down, obviously it goes lower and lower, and you can see that these are the top 10. And then from there onwards is about 1%. Okay, and as you can see, there's so many different stocks. And one thing I really genuinely love about this ETF is how diversified this is. Okay, although majority of the companies are from the UK, you got companies like based in France, for example. You companies like Samsung, for example, Novo Nordisk, for example. I think it's Danish company, right? Novartis, for example. You got loads of different companies, including AstraZeneca's and so on, that are based in different countries. So it is actually diversified. Although the percentage of these holdings is actually quite small, it seems a little bit more diversified. Okay, so it's interesting in terms of their basically. So this is more or less what the S&P basically would look like, to be honest with you. Okay, and when you look at the breakdown, okay, information technology is about 32% and half. Healthcare 17%. I think this looks like my portfolio right now. Okay, consumer discretionary, although I have industrials is actually my second biggest, I think. And then you got consumer discretionary, you got industrials, you got consumer staples, your communications, materials, energy. I like the fact that energy is not a lot in here, which is interesting, right? Because if you have seen energy has gone up so much, you would think this ETF will have a lot more energy. Maybe they've done it, actually rebalanced it recently, so they sold a lot of the energy, put that money back into the maybe information technologies and others. Or maybe information technologies went up too much because Nvidia is in there, all the tech companies that are in there have gone up so much. Whatever the case is, actually information technology is a lot right now. I wouldn't be surprised when they rebalance it, they will take some of that money out and put it into these other ETF, basically other sectors, if you like. Financials 3.2%, and then others is 1.6%. As you can see, in terms of the diversification, in terms of geography side of things, 74% is actually United States, which is a lot if you think about it, but a lot of these companies are based in the US, so you can't expect it. The biggest companies in the world are in the US if you think about it. Almost 5% in Japan, 3% or 4% in the Switzerland, United Kingdom, France, Canada. When I look at this, I'm like, this is really good, right? So very well diversified. Obviously, I would like to have more United States, basically US based companies. If you look at my portfolio, that's what you would see. And then the rest of the world is actually in there too. So it's really good in terms of diversification side of thing. And this is the only thing I don't like, the 7% of Apple and the 6%. It would have been nicer if it was equally weighted, or basically the top 10 at least. Still, it's really good. I'm happy with that. So overall, that is almost everything I wanted to talk about today. So you can see the basic information, you can see the management fee is not actually that expensive. The holdings look good. The only other thing I wanted to basically quickly look at is the performance. So I want to check the performance against the basically whatever it tracks. So when you look at the performance, okay, as of 1st of May 2023, and you look at it annualized, this is the performance for the 1 year for the ETF. That is the index that it tracks, so almost the same, okay? But as you can see here, the other years do not exist because this is relatively new ETF. So it's very, very new, just probably, well, there we go, 7th of January 2022. So it's about a year old if you think about it. So probably same situation as Halal ETF. But yeah, so it's actually tracking the actual indices that actually the indexes tracks. But there's not much in terms of in a few years down the line, 3 years, 4 years, you might actually start seeing the performance is actually better if you can do the 10%. So if the index is doing 10%, okay, these ETFs most likely will do the same. So if we can do 10%, can you imagine investing in that ETF and not having to worry about anything, and you're getting 10% return on your investment every single year? That would be really amazing, right? So I don't know, it's really good. I mean, I really like it. I think Halal and this company. By the way, one other thing I want to mention is, would I rather invest in this ETF or the Halal ETF? I promise you, I'd rather invest in this one. Why? Because of Halal is very, very new. The company itself, the business itself, I don't have much faith. I don't know it well enough. I don't know who owns it. I don't know until they prove that they actually doing all the right things and there's no more legal basic situations with the SEC. We talked about that before. With the SEC have actually fined this company, the Halal Wahid company, if you like. until they prove that they actually are legitimate company. They, they're doing everything they can to make sure that they're not going to lose our money and all of that stuff. I will rather invest in a company like this, okay, knowing that this is a well-established company. They have hundreds of billions of dollars in basically investment, and that I will probably be happy with that, right? By the way, this is the one of the Dow Jones Islamic Market Development Market, which is basically we will talk about this inshallah in the video I said I will be releasing very soon. So yeah, there you have it. I just want to, like I said to you guys, in terms of these ETFs, it seems really nice. And by the way, if you're looking for it and you just go to for example here, and type the name of the company of the ETF, you can find it. You can buy one share of this ETF. By the way, is actually in dollars for whatever reason, but it doesn't matter. You can buy it for $17 or $18. So what would I do? Okay, that's I've always given you my opinion, what I think I would do. Right now, I will be honest with you. I am very, very happy in picking my own stocks because I really enjoy it. And I still have the energy to do it. I still have time to do it. But soon or later, at some point, I'm gonna sell a lot of my stocks, okay, especially those who are doing absolutely amazing. And when I say soon, it doesn't mean next year or year after. I'm talking about maybe 5 years, 10 years, inshallah, right? And then buy more ETFs so I can sleep well at night. And by then, hopefully, we will have all these ETFs very well established, good performance, tracking the overall markets. Then I can just sleep well at night knowing that I have done everything I could, and I can now start investing in these type of ETFs. I do like the iShares one. I like the one that we talked about today. Halal, like I said, they have to prove it to me maybe the next 5 years. If they still exist, if they think still doing well, okay, then maybe I'll look into those inshallah in the long run. But that's the ETF that I want to share with you guys. If you like this type of videos, please subscribe to the channel. Have a wonderful day. Assalamu Alaikum.